So let's get into our dividend play. Just added this to the portfolio early in June, and I'm actually super excited. I actually did add shares in late May, but I'm super excited about this. It's at a great price, and I'm excited to share with you guys because I think we can make some money for the dividend portfolio, and this should actually supercharge the income, right? Supercharge just the whole um, the assets under management for the portfolio. So we have Nordic American Tankers, NAT. The industry is crude oil shipping. Headquarters, Hamilton, Bermuda, which is interesting. And this is why I like this company for one. Even though it's technically international company, Bermuda might be under U.S. Rule. There's no fee. There's no ADR fee. Like if you wanted to invest in a Japanese, English, Australian company, there's an ADR fee, and so they take that out of they take that out of your dividends, capital gains tax, and whatnot. Not for this. No ADR fee for this. So it's not going to hurt our compounding effect at all. The dividend yield at around $4 is about 10.75%, 75%. So 10, 11% dividend yield, it's high. A lot of people say, oh, you don't want high dividends because they're taking cash away from the business to grow. Well, for the crude oil tanker industry, there's not much growth on the bone to be had per se operationally. It's highly competitive. People already have large long-term contracts. A lot of things are set in stone. The growth comes from the pricing. All right. And so that's why the super cycle is important. The growth comes from the super cycle with their income and profits getting more generated and whatnot. We're not investing in this company to see a super, super high stock price. Yeah, we want to see the stock price go up. I would like to see the stock price go from $4 to $6, but we want to make sure that dividend's intact. All right. The PE ratio really in line. It's 8x PE ratio. The CEO, Herbjorn Hansen, Norwegian, and you'll see right here my little small bag of NAT right now. I have 49 shares at average of $4.04. It's sitting at $3.98 right now. So really anything under four, I'm pretty confident in buying. So I'm going to be getting into the mix again. I'm going to keep adding more shares on. In regards to what's happening on the insider board of directors level, so on March 12th, 2024, only 4 months ago, Alexander Hassan, non-executive vice chairman of Nordic American Tankers, and son of Herbjorn Hansen, the NAT founder, chairman, CEO, bought 250,000 shares of NAT at $4.25 per share for a total sum of $1 million. So when I first initially bought shares of NAT, it was around that $4.25 per share range. Obviously, I just wanted to get in the game, okay? But when it started to go under $4, that's when I really started to buy more. And so I'm going to just keep doing that process. It's one of the only opportunities in the market right now that I really like. And I'm going to keep levering into it. In regards to some Gematria, I have NAT stock, 100% Suez tanker fleet, 330 English ordinal, 30, 0 is just a value placeholder. Shipping and Pluto and Aquarius, 133 English reduction. Pluto, the planet Pluto is in Aquarius right now. So we're in a more Aquarian, a water-based age, oil tanking, shipping industry, right in line. Oil tanker stocks with war conflict. Obviously, we've always been in war conflict, 133 English reduction. Nordic American tanker stock in 2024, 133 reduction. So as you see, all these equal 133 in reduction. Shipping in Pluto and Aquarius, oil tanker stocks with war conflict, Nordic American tanker stock in 2024. Then we have a bunch of 137s the 33rd prime in English reduction. We have Nordic American Tankers Profit, Shipping Stock, Pluto and Aquarius. Norwegians run crude oil tankers. Nordic American Tankers Limited, NAT in 2024, and Nordic American Tankers Limited, NA Stock 2024, all equaling 137 English reduction, the 33rd prime. So you see the power there. And this is why I like the company. The son of the CEO and founder just bought $1 million of their company 3 months ago. Does that not show confidence to you? I think that's a lot of confidence. And they know where this is heading. Okay. They know where this is heading. So if the son's buying, I'm buying. Not financial advice though. And so moving forward for Nordic American Tankers, NAT, before I go over the highlights that Herb Jordan talked about, I'll go over some of the number highlights that fundamentally, okay. So the assets they have is 869 million, 0.72 million. Total liabilities is 340, almost 341 million. So their net shareholder equity is 528.3 million. And so don't disregard the B. It's million. So 528 million. Shares outstanding 208 million. So the net equity fair value just off shareholder equity to the shares outstanding, the net equity share value is $2.53. Now that's if the company was sold tomorrow with their assets and liabilities. That doesn't account for the super cycle we're in right now. That does not account for the time charter rates that are at firm, stable levels, at elevated levels right now, and that's why you see the premiums on the stock. That's why we have about $1.50 premium on the stock right now. It's because of the part of the cycle these companies are in. So it's not a bad thing. I don't think it gets down to 250, but if it did, I'd be buying a lot. The 2023 revenue was 391 million. The 2023 operating expenses was 74 million. 2023 net income was 98.7 million. And so with the new annual dividend, now this is what they really did this year. Annual dividend is 48 cents for the whole year, so 12 cents per quarter, times the outstanding shares outstanding. It's going to be 100.2 million per year that they have to pay out in dividends. Okay. So their net income is almost in line with their dividend. And a lot of cases, in this case, companies will use leverage. They will use loans to pay the dividend so it doesn't hurt operations on the back end. And I think that's sometimes a smart move. The return on assets is 11.45%. So that's in line with the industry average within the shipping industry. You want to see it above 10 return on assets for the crude tanker industry. Return on equity, 18.7 at 17%. Now this is above average in most cases for most companies, but this is low for the tanker industry. There's return on equities up to like 38%, 40% in some companies. And somebody might ask me, Art, why this company? We went earlier on in this conference call talking about we want higher equity, return on equity, the better. Why are you picking Nordic American Tankers that has an 18 ROE over Frontline or somebody else that has 30%? Well, the difference is the return on equity for NAT would be a lot better if they didn't have a dividend. Over time, dividends, kind of they chip away at the ROE. They degrade it a little bit because you're taking away, you're using profits, net income to pay the dividend, which takes away from your assets, which could be cash on hand, right? And so it slowly just chips away at the ROE. But The big difference is NAT has a dividend that is double, in a lot of cases triple, of what these other shipping crude oil tanker companies are doing. All right, and so that's fine. They have the Nordic NAT has a 10% dividend with a still good return on equity at 18%. That's okay if another tanker has a 30% ROE, but only a 3% dividend. It all kind of evens out. I'm gonna take the higher dividend, right? And so gematria wise, we have dividend lowers ROE over time, 137 English reduction, 33rd prime. Using leverage to pay dividend keeps return on equity ratio from getting low, 333 English reduction. Now, looking at their files a little bit, I don't believe they heavily used leverage, a loan to pay the dividend off last year because the price is really good. They really could have just paid with their net income or profits. But I think in years prior, that's what they were doing, paying the dividend with the leverage with loans and whatnot. And that just keeps investors involved. That keeps investors happy. That keeps investors company and secure. They want to see the dividend. They want to get that income. And this company makes enough money to essentially pay it. All right. As you see, they raised the dividend up this year. It's going to be 100 million this year, 2024. They made 100 million in 2023. It's right in line. They're not. I don't think for 1 second the company is really struggling. And so from the earnings report, I just wanted to read the highlights real quick from what Herb Jordan said. I'm going to zoom in a little bit. This is what Herb Jordan said on the front of the ER for highlights. 90-day periods offer a short-term snapshot of a company, but it is also important to view the long-term picture. The values of our assets have seen a significant increase over the past years. The direction of NAT is unquestionably upward, with further room to grow. The first quarter of 2024 continued at a strong pace with healthy earnings. The net profit for the first quarter of 2024 came at 15.1 million, which is similar to the previous quarter, Q4 2023, with a net profit of 17.5 million. The first quarter of 2004, the dividends is 12 cents per share. This is our 107th consecutive quarterly dividend. The dividend is payable July 18, 2024 to shareholders on record as of June 28, 2024. The average time charter equivalent, TCE, for our spot vessel during the first quarter of 2024 came at 34,320 per day per ship, including vessels on term contracts. The total average NAT TCE was 33,570 per day per ship. The daily operating cost per ship was about 9,000. Going forward, we clearly see strong demand for our vessels. That's good to hear. They're paying the dividend strong. We're seeing strong demand still. The supply-demand dynamics in the market for the fleet of NAT are favorable. And that's the consensus for all CEOs across the whole industry right now. Look around, like talk to CEOs. They all are feeling the same thing. This is a great time right now. And we're just getting started. Like it's just like it hasn't even bubbled over yet. Like we're not even close to a top. We're still super close to the bottom. All right. The NAT fleet of versatile Suezmax tankers offer flexibility in loading and discharging ports. Through careful voyage planning and adjustment of speed of our vessels, we reduce emissions. Each individual ship in the NAT fleet is of excellent technical quality and demonstrated in the vetting performance. The scoreboard undertaken by the oil companies. So the oil companies have vetted all the Suezmaxes on NAT. They like it. They're good. And NAT has one of the number 6, the final highlight. NAT has one of the lowest debt levels among publicly traded listed tanker companies, which is good to see. All right. So this is why I chose NAT. This is why I chose Nordic American Tankers. Non-executive board of directors buying $1 million worth of shares of the company. The son of the CEO, he obviously knows something. Okay. The whole industry is favorable right now. The TCE rates, the crude oil tanker rates, they're high. All right. They're paying their dividends, 107 consecutive quarter dividend, and they are a dividend paying company. Herb Join is unquestionably saying we are a dividend paying company. We will keep paying one. And they would like to keep rising it over time if possible. Okay. And so this is why I like the company. Yes, the return on equity is important. It's still high. It's not the highest in the industry, but they have triple the dividend. All right. And they've been doing it for a long time. That's why the ROE has been degraded. Has nothing to do with the quality of the company. And so, again, I have a couple $100 in it right now. I'm gonna keep adding to my position to keep growing it.